through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in
I'm fixing
daily,
my
don't
hair,
miss
bro.
a single show. Sign up for the newsletter, let us help you grow. Taking risks,
write some
making
jokes.
moves, seeking success. Together we'll conquer, no room for any less. Listen now.
I guess the Tyreek Hill joke.
Every morning I
that
wake
was
up to
on
the
Friday was
sound
big,
of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less.
I don't think I looked at it. There we go. It's working. We're good. I got a pretty good show today. Pretty good. I got my schedule, my Spaces schedule for the week. Tuesday, Wednesday. I was just telling my girlfriend I think I'm gonna go hiking after the show. Kind of my guide as to what to do now, and then how to buy stocks. So for folks like, experienced folks, it might be a little bit beginner. We're going to go over 2 alpha pick stocks that I think fit how to buy stocks. Modine Manufacturing, MOD, if you want to look them up, and Brinker International, EAT. Both were picked this year by Alpha Picks, and have significant gains. EAT's up 50% since they picked it, and Modine is up 114% since they picked it. And then we'll go over, the Tyreek joke. I need to write down more jokes. I'm probably, I have written jokes for comedians before. I've been a writer of jokes, but I am definitely a far better writer than performer. And I learned that out when I did stand-up. It was horrible. It was horrible. one of my girlfriend's laughing. One of the most horrific, like cringeworthy times in my life was doing open mic night, and they didn't laugh. Just, I don't care what I said. The audience just didn't laugh. It was like one of those freaking prank shows, and they didn't laugh. And you're up on stage with a microphone in your hand. And Gilbert Gottfried talks about this all the time. And he was great. You know, he talks about opening up for the Go-Go's back in the 80s. And he was a beginner comedian. And and so he's opening up for the Go-Go's, and nobody wants him there. Everybody's like, we're here to see the Go-Go's. And he just spouts off the C word and the F word. And it's a bunch of 12-year-olds in the audience. And I did not go that route. I just kind of said thank you, walked off the stage, and never did it again. So, yeah. We're going to make sure the price is the same. Yep, the price is the same. We're going to open up our newsletter. I should put free newsletter in the link tree description. This is what I was going to show you, by the way. This is my suggested YouTubes. It's Cartnarks, who I freaking love. Investing with Brandon, I think he's good. I think if I were his manager, I would tell him he's getting into clickbait territory a bit too much. Not that he doesn't know what he's doing. He's not a grifter, but he's definitely getting into, I want to be famous for this. I want to make it rich. And then this was the big one. Reading Caroline Ellison's Steamy Diary. That made me freaking just laugh. That made me laugh. That made me laugh. Bye. Saying goodbye to the girlfriend. Do 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 do. I honestly don't have that much news to go over, so we're gonna go over charts. Let's do some scans. Eli Lilly. Hoofa. If there's one episode, I hope it turns out okay. I never script this stuff, so I never know how it's going to turn out. Sometimes I'm super pumped about the content that I'm about to talk about, and then it just winds up being a blubbering mess. And then somebody tells me, oh my God, that was the greatest thing ever. Greatest advice you ever gave. Well, I don't think today's going to be the greatest advice I ever gave, but DRUP. What the hell is DRUP? Granite Shares, NASDAQ Disruptors ETF. That's interesting. I was on the Spaces last week with CEO of Granite Shares. I liked him. I liked him a lot. I think he was, XLU. Oofa. Are we going for another run? God, and I got to recharge these damn things. Are these going to die? No, they're at 20%. Okay. Remind me at 11 a.m. to plug in the keyboard. That'll remind me. Okay, I've added it. I've got an Indian woman that speaks to me. Might be South African. I don't know. Money Crew by Wolf. Let's see. Dow 30. Nothing in the Dow. Let's go to the NASDAQ. Fortinet. Huh. Hey, Chris, Fortinet crossed up again at $77. I got out at 70. You know, Star, that kind of question, there's no way I could tell that. If I thought that Bank of America for sure would set up and go to all-time highs, absolutely. I said Bank of America under $40 was a great buy. Right now in pre-market, it's at $40.25. Do I think you should buy it? Absolutely. Let me just look at the S&P real quick, and then we'll look at the chart. Eli Lilly. There we go. Okay. So let's go back to the 4-hour. Okay. See, Fortinet, $76.79. God, it might be going for another leg. This is Bank of America. This is Fortinet, by the way. This isn't Bank of America. I mean, that might be getting ready to break out from a multi-year kind of thing. Now, the 81 is going to provide some resistance. That's the 2023 high. But God, Bank of America here. Okay, so here's Bank of America. Yeah, my dad took profits in it, so I'm perfectly happy. So, Star, morning, Laurel. Here's Bank of America, and the algorithm makes you 59% versus 19%. When I said buy under 40, look at the past couple of buys under 40. They all made money. You know, then you take a look at a weekly, and you know, where's 40? 40, 38, 39 seems to be a pretty good resistance from a weekly standpoint post-pandemic. You look before COVID, it was a $35 stock. I think with rates getting lower, I think it continues to grow. If we look at a weekly prior to the pandemic, it was growing. I mean, it was good. You look at run up here, 2022, your highs, $48 is your high. 50. Up here, January 10th, 2022, at the all-time highs, 50. So, do I think it's set up in the next 30 days? I don't know. You know, you could have October earnings come out, and they just, they shit the bed. October 14th is the earnings. They might shit the bed. Net interest income may come down. You may not like what you see in that one, but I don't know. I mean, there's too many catalysts to say for 30 days I think it's going to be up. Now, a year from now, do I think it's going to be up? I like this one. I mean, honest to God, it's the largest bank, too big to fail. It fits Bank of America. The quant says it's a strong buy. It's ranked 10 out of 69 in the financial world. Worry Financial, KB Financial, Barclays, NatWest, CM. This is it's the largest. You look at it. It's $312 billion. $312 billion. Let's just rank it by market cap. It's the second biggest bank. JP Morgan is the biggest. I'd say Bank of America poses the best opportunity outside of, the big one. Wells Fargo is one as well. Oh, well, I was saying Wells Fargo. Okay. So you're asking Wells Fargo. Well, you asked, yeah. Well, here's Wells Fargo, okay? We can look at this one. The range is 38 to 62. You're trading at 56. You look at Wall Street, they say it's worth 63. So it hit 62. It's got that in there. It's 12% up. I think that's a pretty good one. You go back here, you look at the 4-hour algorithm. Let's see how that one performs in the 4-hour algorithm. Makes you 48%. Buying and holding makes you 29%. So you can definitely look at it as an entry. 54. You got confirmation. I went over confirmation this week in this video course series. So I'll get better at that video course series too. I'm just not very good I'm good at winging it, but I got to organize my thoughts a little bit better. But I thought it was a decent one. It's just a rehash of some old processes in the education section. So I thought it was okay. Morning, Mark. No regrets. No regrets. Okay, let's go to QQQ. Okay, let's open up some links. Okay. I was on Spaces last week with Austin Hankowitz, and he goes over this one. He's one of the editors of Grit Capital. I thought it was good. He goes over CSHI. He thought it was good. I found a different one in there. When the creator of Bollinger Bands says he's waiting for confirmation and he's bullish on Bitcoin, you kind of buy Bitcoin. Let's see. Apple Draw stores were pretty much packed. I don't know if you went and saw an Apple store this weekend, but it was pretty freaking packed. Like most weekends. First weekend, iPhone 16 sales, bullish. Apple had a crazy day Friday. It sold off in the last 5 minutes. It was, it was nuts. When you buy Berkshire, here's what you're buying. Very simple kind of chart. The equal weight QQQ. This is QQQE. Jack Alpha Charts. He's pretty good. Looks bearish. Might be set up for a bullish. It's his most bullish chart this weekend. We will go over Alpha Picks, 2 of them, and 2 of them from last year. 2 of them from this year. 2 of them from last year. How to choose stocks. How the big banks are saying the S&P will wind up, and we can look at SPY on that one. Your choices, what to do, because we're in this strange period between points. Risk percentage of S&P constituents above their 200-day. We're entering the danger zone. Risk off, risk on, risk off. So I think it's, again, if you're kind of new to this and just, hey, I just got in August and I got in at the all-time highs. Should I be worried? Well, now's the time to kind of pony up, and I think this episode's for you. Might not be great for folks like Chris or something like that, but I think you guys just like hearing my voice sometimes. I'm like Barry White. Let's get it on. Okay. I'm going to hit the record button here. Once I get my mouth, I say it with an F, my mouth, a little juiced up, Let's go over here and we'll go to the home. Redburn Atlantic added 5 new stocks for his Mind the Gap list with 4 of the names outlined. Identify stocks estimates that significantly diverge from broader market and highlights the most promising opportunities for these gaps to narrow. Somebody talking their own book. Morning, Troy. Okay. We've got there we go. I don't have a crazy week. My week's pretty much just divergent to each other. Okay, we're recording. Hopefully this doesn't F up. Good morning. It is September 23rd, Monday. It's Monday. I got a lot of positive feedback about my Tyreek Hill pullout joke on Friday. So my to-do is to write more jokes, to write more jokes, make it a little bit more entertaining. I do think that people tune in just for my voice. I likened myself to, just about 5 minutes ago, to Barry White singing "Let's Get It On." Let's get it on. So if you're tuning in for my voice, have at it. It's low. It's sultry today. But space is scheduled for this week. I'll put it in the newsletter. Tuesday, 2 p.m., Wednesday, 5:15. I'm going to be on late night. So for you West Coast people, you can hear me shout out at the shout off. And I'll put the topics in the newsletter as well. If you're not subscribed to the newsletter during the week, it's free. During the weekend, I started this video course series. It will expand to more courses. I'm going to do more video courses. And all you have to do is become a paid member of the newsletter. Support me a little bit. I do most of this for free. So don't think that you have to pay for this newsletter to get anything. During the week, it will absolutely 100% remain free. Newsletter is just during the weekend. I try and give more information. Today's topics are pretty much what you can expect in the paid newsletter. I thought it was important to give people free, the free subscribers, a little bit more insight into what I do. So today, we're going to go over why we're in a weird time period here where we're at all-time highs. The Fed decision is already done. They've outlined the rest of the year already and what you can do. We will go into how you pick stocks and how you build a portfolio. We'll go over, why Alpha Picks is so good for building a portfolio. 2 of their picks from this year, 2 of their picks from late last year. We will go over why QQQ equal weight looks pretty good. We'll go over Berkshire. We'll go over Apple. We'll go over the creator of the Bollinger Bands, John Bollinger. Actually just said he's bullish about something. So we'll look at that. And we'll look at some social requests. It'll be a pretty good show. I think if this is the one episode that you listen to, I think this is a good one to give you an idea of what I go over every day. So let's start. We're in this weird period, and I will tell you, with VOO at its all-time high and SPY at its all-time high, look at this. This is Friday, okay? This is the percentage of the S&P 500 above their 200-day SMA, simple moving average, okay? This has typically, all the way back to the beginning of this year, as you've gotten to this high percentage, which is 78% or above the 200-day, you've wanted to take some risk off, meaning if you've got a big winner and it's identified as a trade, maybe take it off because, again, we're at all-time highs. We're moving towards those highs. If you have some losers in your bunch, maybe it's time to cut those losers because if you go down and those losers continue to lose, you're going to be screwed. So, again, it's just an interesting time to take a look at it. So let's take a look at the actual charts. QQQ. I have said that you're trading in recent terms between 450 and 500. You're at 482 right now. Okay, 483 in pre-market. You closed at 482. You have confirmation. The algorithm got you in at 468. The algorithm makes you 58%. Buying and holding makes you 63% as we continue to go up on this. The algorithm does underperform a little bit, but think of the algorithm as something that just gives you guidance. Okay? We all have different risk tolerances. We all sleep differently at night based on our investments, based on our money, based on our lives. If something like QQQ is giving you stress, and you can't sleep at night, it's time to get out of QQQ. Time to get into something a little more safe. You may want VOO. So we can take a look at VOO. QQQ, though, it looks solid. We can take a look at VOO right now. VOO, algorithm got you in at 512. Algorithm makes you 43% over 24 months and 45% if you just bought and held. It's 19 positions. So don't think you're trading in and out of these indexes with a 4-hour algorithm. So again, we're at all-time highs. We're pushing up there. It's a little bit uncomfortable. Risk on, risk off. This points out maybe it's time to take a little bit off. We're in this strange period where the Fed decision is done. They've outlined everything for the year. What do? I think you've got a few choices, okay? One, you do nothing. You do nothing. If you're sleeping at night and your portfolio's working for you, you do nothing. If you're beating VOO for the year, if you're beating QQQ for the year in your portfolio, and you don't have any losers, and it's all winners, and you're feeling comfortable, you do nothing. There is nothing wrong with doing nothing. Now, portfolio management, maybe this is an option if your portfolio is underperforming VOO. You may want to just take a look at some of your losers and cut them. Put your money into your winners. Again, from a seasonality standpoint here on QQQ, look, 40% in September. So far in September, we can go and look. Where did September open? If we go back to September 3rd, 9:30, we opened at 473. You're at 482. If the seasonality proves to be right, then over the next couple of weeks, or the next week, we're going to pull back below 483. We're going to pull back. 478 was where it opened. So if you're feeling uncomfortable, maybe you just want to look at your portfolio. Another thing that you can do, build a watch list. Put a watch list. Maybe you're underperforming because you don't have winners. Make a watch list of 5 stocks that you like. Okay? If they pull back 5% or more from where they are today, you buy them, no questions asked. No questions asked. You start a position. Okay? That brings us to our next step. Find a strategy. I watched a YouTube video this weekend of a girl who's made $150,000 this year in profits based on nothing more than trend lines. And here in Trendspider, trend lines are super, super simple to draw. Okay? You put it at a point, you can put it right here at 426, and it will draw it for you. See how it's just anchored there? You want to touch 3 points. A trend line touches 3 points. Don't make it random 3 points, but make it 3 solid points. You can Google on YouTube how to do trend lines, but maybe that's a strategy that you want. Maybe you want a strategy where you use the MACD. My algorithm's based on the MACD. Maybe you just want a Warren Buffett style where you buy undervalued companies. The key point is there are so many tools today that the strategies that you want to use, maybe you just build an ETF portfolio with VOO, Berkshire, and QQQ. And I'm in a high net worth group of people. I am the poor one in this group. Full disclosure. Most of these people have high six-figure $1 million, like 100 million, 200 million points. We talk about these things. I would say 50% of these people have VOO and other Vanguard ETFs in their portfolio. They can't sleep if they had Tesla in their portfolio. They can't sleep if they had Apple in their portfolio. So ultimately, I think we should see some volatility based on seasonality, but the catalyst of the rate cuts behind us. And October is when the earnings season starts. So let's take a look at where everybody, the big banks think we're going to end up at the end of the year. And this is SPY, okay? SPY is just, BMO thinks 6,100. If we go and look at SPY, now 6,100 would be $610 on SPY. Today, you're trading at 569. Okay? There's an August 15th gap down here that was filled. Do we go and does this 565, the previous all-time high, does this turn into support? Because when you look at the year-end targets, look, Evercore at 6,000, Oppenheimer 5,900, Deutsche Bank 5,750. You're getting towards that support level. RBC 5,700, UBS 5,600. Again, from that point down, it is all down from here. All down from here. So everybody from Citi, Goldman, Barclays, Wells Fargo, Bank of America, Morgan Stanley, Fundstrat, Fundstrat is at 5,200. That's Tom Lee. Now, I think he's brought his up since then, or will bring it up. JP Morgan, 4,200. But again, SPY is at 568, 570. You add a 0 to that, and that's where the S&P is. So take a look at that. Again, I think we are heading into a strange period where nothing may happen between now and earnings period. Earnings is going to be the next catalyst, and that's October. So what you do, again, you have the choices. Nothing, manage your portfolio a little bit, build a watch list, find a strategy. But again, that's what you have to do. It's not like, me, I'm probably doing nothing. I may be adding at this period. I may be adding any pullback that I see, I want to add. So now let's talk about that watch list. How do you choose the stocks that might be in your watch list? Okay. I found, I went back and I was going to post, when I think it was March 2006 is when I first posted. I was going to post the Fidelity. Okay, here's the buy that I did at this price. I couldn't find it. I think the average purchase price down there is like $3, $5 per share or something like that. I couldn't find the actual price. I remember plenty of times with Apple feeling uncomfortable. Here at 227, I'm uncomfortable. $230 has been the uncomfortable portion for me. If we take a look at this, the reason it's uncomfortable is because of the valuation. Okay, until earnings comes out, and we'll go over this because I've got more articles on Apple. But until earnings come out, the valuation of paying 34 times earnings for Apple seems a bit stretched to me. But for me, the first reason I buy stocks, find products or services or a company you work for that uses products or services and they can't live without them, or you can't live without them, or that sound like they may develop products that you can't live without. Okay, you bought a Rivian truck. You love Rivian. Go and buy Rivian. I don't care what the valuation is on Rivian. It's a long-term. If you can't live without your Rivian truck, they're not making money. But if you can't live without a Rivian truck, there are plenty of other people who can't live without a Rivian truck either. Okay? This was what made it clear for me in my portfolio. I go over this all the time. Apple, the Apple products that I have. And I bought into the ecosystem. I'm not leaving. Amazon, I have Prime. I can't live without Prime. Tesla, I bought a Tesla. That was in my portfolio. When it got to a stretched valuation, I decided to take it out of my portfolio. But I still have exposure through XLY. It's the only reason I hold XLY. Google, pretty obvious. Gmail, I mean, it's the other application with Android. So I think a lot of people can't live without Google. XLK, that just has all of the tech sector. So that's how I built my portfolio. The second thing you want to do when you find something is look at the chart. Okay, let's look at an Apple chart on a monthly basis and say, okay, was I ever nervous about getting into this? Absolutely. Was I ever nervous about holding it? Absolutely. But again, your risk tolerance is going to be different than mine. So look at a chart. If the chart is something like this, then I think you're okay just buying the stock and holding it. You want to determine if the company can continue to grow their revenues, continue to grow their profits. If they have good, we'll talk about this too at the bottom. If it's a good company with good management, good products, and good profits, you're probably going to be okay. Okay? Find out the fundamentals. We just talked about how I don't think that Apple is a great buy here at 30 times earnings, but if the iPhone is truly going through another refresh cycle and their revenues are going to grow, this could kick the stock up. And that's why you're seeing Wall Street with a $238 price target. That's only 5% up, but it is a little stretched. It's the number one stock out there. And there are plenty of places to find charts. You don't have to use, Trendspider. Trendspider is an awesome service. Yes, I'm an affiliate for them. So if you want my 4-hour algorithm, if that's something that you like, Trendspider is the top chart here. Okay, it's that top link on Linktree. The link is down below on the video, linktr.ee/daily stock pick. You click on that. You get over here to Trendspider. It's $53 a month. Okay, that's for the standard The enhanced, I would suggest enhanced for you. If you can get, if advanced is in your budget, then get advanced, because advanced comes with unlimited one-on-one training. That's the key. You know, unlimited one-on-one training doesn't come cheap. But if you're new to technical trading, they will help guide you through your setup, through identifying, you know, what your system might be in helping you identify technical stuff. It's a great tool. And advanced, yes, if it's in your budget. But if not, $53 a month on standard. If you're trading and you can't afford $53 a month, go and get Thinkorswim. Or you just go over here to Webull. Webull has a great desktop software that you can get that has MACD, that has all the moving averages. You can set that up. It just doesn't have all the bells and whistles that Trendspider does. Start understanding charts. And then the third one, find out the fundamentals. Read analyst reports or stock summaries. If you have Seeking Alpha, that's the next one that I offer. It's the second one here, Seeking Alpha Premium. You save $25 off your membership. Lock in your renewal rate because it goes up October 1st. Okay? But you save $25 and you get a free 7-day trial. Now, here's the thing. Do you have to go with Seeking Alpha Premium? No. For years, I used FinViz for 100% free. You just have to weed through a lot of stuff with FinViz. Seeking Alpha is a time saver. That's the main portion of Seeking Alpha. It's a time saver, and it was worth the money for me so that I didn't waste my time going through a bunch of articles where people were just talking about junk. Okay, FinViz, they will talk about junk. Seeking Alpha has a curated list of analysts and news stories. I like it. I like it a lot more. Okay, but remember, 1, find the products or services. 2, you look at a chart. If a chart, you know, we can take a look at a chart. A chart of a stock that you may not want to add in long term is something like Boeing. Okay, you saw the monthly chart on Apple. Look at Boeing. I do think that Boeing has an opportunity to get back up here, but do you want to own this one long term, or would you rather trade it? In my mind, again, it's under the 9-day. That confirmation, I talked about confirmation in the video course this weekend, right here. What's confirmation? Well, confirmation is in the 9-day EMA. You can watch that video. And again, I think you can watch it for free. I don't know. I think I may have taken that off for that one. But the video course, I may not offer, you know, a free 30-day trial, or free 7-day trial. But again, if you just look at Boeing, it's not a stock that you want to go into for long term. Identify it as a trade. It's something that you want to keep an eye on. But again, how to build a portfolio, add to your winners. Take out your losers. So you look at that long-term monthly chart, and if it's a loser, you look at that. But again, find out the fundamentals. Look at the chart. See how it compares to industry peers, okay? Say you go to Apple, and you say, okay, I want to know what the industry peers are. Well, here, Seeking Alpha put some stuff up there. You know what? Let's just look at something a little bit more. Bank of America. What are their peers? Wells Fargo, Royal Bank of Canada, Commonwealth of Australia. You know, it puts it in there for you. Puts a nice chart, gives you all of this stuff. So again, Seeking Alpha does it. But for years, there is no reason, if you don't think that the money for Seeking Alpha is worth it, go and find a tool that's worth it. Okay, we all have different spending patterns. We all have different tools that we like. Develop your tools. How to choose stocks for your portfolio. This is the thing. 1, find the products or services. 2, look at the chart. Find out the fundamentals. See how it compares to the industry. Okay? Then, number 5 is probably the most important. Start buying if you find a stock that you like, but make sure you size it correctly. Ultimately, if it's a good company with good products, with growth and good management, you don't need to get in and out of the stock. You just need to start with a small position. Use longer term charts, identify a strategy for it. You know, maybe something like Apple, you may want to use like a MACD strategy where you get in when the MACD crosses up and you just start adding to it. Maybe with Boeing, you want to do something where, you know, the RSI, you want to use the RSI or a moving average. Every time that it crosses, the 50-day crosses up, you buy it. And when it crosses down, you sell it. Maybe something like that. Use a longer term chart, but ultimately don't hold on to losers. Make sure that you're cutting your losers. And if you buy something for the long term, say you buy Apple up here at 227, 228, okay? And it dips down for earnings down to 200. And then you have to identify, is that something that I want to add to, or is it something that I want to cut because it's going to become a loser? Okay, that's where your choice comes in. You have to ultimately, something like Boeing we went over, something like Intel. I get a lot of questions about Intel. Is it time to buy Intel? Intel's a crappy ass company in my mind. Intel is not something that you want to hold on to. They just haven't figured it out. Okay, you could go back to 2002. Say you bought in 2003, October 2003 at $30, and you held on to this, and you thought it was going up. Well, you went all the way down to 15 in November 2008. Okay, this is not a stock that has winner written all over it. Now, if you bought in 2009 and you're at $15 and you rode it all the way up here to 61 in March of 2021, and then you saw it go down, again, you saw it go down. Clearly, it's months and months of weakness here. Take your profits. Something like Ford, very similar. Ford is a car company. And you might say, well, I drive an F-150. I got to love my Ford. Most people will love Fords. There's other things in Ford other than just loving Ford. It's the cost. It's the fundamentals. So those are the 5 steps in building a portfolio and finding stocks to add to it. And when you have times like this, when there really isn't a lot of catalysts, okay? Seasonality right now between now and earnings is the huge catalyst. You want to identify your winners and losers. And you want to identify, are these beating the S&P? Are these beating QQQ? Where are they? And if you just want some ideas on a portfolio, the third thing is alpha picks, okay? We're going to go over 2 alpha picks right now from this year and 2 alpha picks from last year. Alpha picks is a curated portfolio. It's the third link on Linktree. And the performance is what you want, okay? Performance, 114% for this portfolio versus 38% for the S&P during the same time period. It's 2 stocks, one on the 1st, one on the 15th. We just had one, okay? I can't go over the most recent ones, but I can go over ones that are over 3 months old. They alert you when to sell. That's the key. This is a portfolio. Okay, it's not managed for you, so it's not like they're going to buy it and sell it for you. They send you the analysis. If finding analysis is something you're new to, Alpha Picks might be for you. First year is $50 off, okay, $450. You get access to everything on day one, over 20 stocks. Their performance significantly outpaced it. So let's go over 2 of them, okay? The first one, and these are ones that I never would have found without Alpha Picks. This is one from January 1st. It was the first pick of the year. Modine Manufacturing. Okay? Modine Manufacturing on the 1st of the year. If we just go back and we look at the 1st of the year and we go, okay, let's say you didn't read it on the 1st. Let's say, second here, it was trading at 61. We're just going to say 61 because it might have felt uncomfortable to buy it. When you're down 3 or 4% over just a couple of days, you were down. Okay, you're up 116%. Officially, in Alpha Picks, it says you're up 114%. 114%. So this is Modine Manufacturing. Again, if you have Alpha Picks, you got this. If you have Seeking Alpha Premium, because they are 2 separate subscriptions, you could go over here and take a look at the quant where it says the valuation's a bit stretched. You can look at Wall Street. There are 6 analysts that cover this. Their price target, 136. You still have 6% upside. You can take a look at the 4-hour algorithm on this one. It got you in at 110. You're at 128. You could have traded this one the entire time. Over 24 months, the algorithm makes you 277%. Over 24 months, if you bought and held, you're up 751%. Again, you're still holding this one in that Alpha Picks portfolio. Another one that came on the 1st of April. Just the 1st of April. Another one I wouldn't think, and I didn't buy it. I said, why the hell are they going into this one? This seems crazy. I read the report this morning. It was because it was undervalued and they expected it to go. April 1st. Okay, April 1st is right here at $49. Didn't feel comfortable sitting there waiting for it to go down to 44. So you bought at 49. You're up 49% year to date. EAT is the symbol, Brinker International. And if you go over here and you look at EAT, let's see what Wall Street says about it. They say the average price target right now is $68. If I'm managing this in the portfolio, I'm looking at it and I'm saying, you know what? There's 19 analysts that cover this. They say it's $68. I might want to start trimming this because I'm up 49% year to date. And for me, something like EAT, I'm not looking at that one as blowing it out with, new innovations. It's a freaking restaurant company. So for me, I might look at trimming it. That's how you use these tools. That's how I guide you to try and use these tools. Now, let's take a look at two of the late 2023. Both of those, Modine and Brinker, they were both in 2024. Just this year, they're up 114% this year and up 49% since they were picked. Okay? There's two others. We talked about one before, AppLovin. I went over this one last week. It's been huge just recently. This one is up hundreds of percent since they picked it. I think it was November. If you look at November, say, I don't remember the exact date they picked it, but let's just say they picked it on the 15th. Okay? On the 15th. You were trading at 41. You're up 200% on this one. 200%. Okay? That's how strong this portfolio is. Now, ANF, I think they picked this one. I think this one might have been the November one. But ANF they picked. They are up huge on ANF. I forget when they picked it. I think it might have been December. Let's take a look at December. Because I remember seeing this one and I'm like, yeah, I don't cologne myself and I don't wear jeans that are ripped and blah, blah, blah. But if you just looked at this one, it might have been the November 1st because I have a little thing here. That might be, yeah. This is probably it. We can just take that and push it over here. And you're up 119% since they recommended it. So, again, alpha picks. How do you build a portfolio? You find things like this. And if you don't know how to build a portfolio, take a portfolio that's already built for you, that's winning. Try and glom on to something like that. That's how you do it. So again, I got it out of the way. What are we going to do for until earnings season comes up? You got your strategies. You pick what you do. And then how do you find stocks to do? This is what I try and teach people. I try and teach people how to fish rather than just giving you a fish. Yes, I still give you fish because I do scans on the 4-hour algorithm. Now let's talk about this. This is Alpha Charts. This is Jack from Alpha Charts. Equal weighted NASDAQ QQQE breaking out from a giant base might be the most bullish chart for the week. We talked about last week how the Qs are underperforming the other indexes short term. Okay, VOO is at an all-time high. Qs are not at an all-time high. They're underperforming that. IWM is underperforming the Qs. But if you take a look at this one, it's QQQE. QQQE is the symbol. And let's go look at the 4-hour algorithm because, again, that's my strategy, is the 4-hour algorithm. Now, over 24 months, the 4-hour algorithm makes you 29% versus buying and holding makes you 35%. We can take a look at this one even in Seeking Alpha. We can chart this, QQQE. If you're afraid of the valuation of QQQ, the Qs, because they're so heavily weighted into that Mag 7, we'll take a look at this because it's 103 names, 1%. And we can go look at QQQE and then select symbols, and I can do just QQQ. Let's see how the equal weight performed against QQQ. We're going to take the S&P out of there. Okay, over 1 year, QQQE is underperforming. Over 3 years, it underperforms. Over 5 years, it underperforms. But when you start bringing this one in, 6 months, it underperforms. 1 month kind of equals it. 5 days kind of equals it. 1 day kind of equals it. So again, this is a bullish chart that Jack says. You want to take a look at that. That's, again, I don't say that you go out and buy these things. You have to know what you're doing when you're looking at it. Now, we talked about ETFs. Berkshire Hathaway. What are you buying when you buy Berkshire? You're buying Apple. You're buying Chevron. You're buying Ally Bank. You're buying Sirius XM. You're buying VOO. You are buying MasterCard. You are buying Coke. You are buying Kraft Heinz. You are buying American Express. You're buying Visa. You're buying Occidental Petroleum. You're buying Bank of America. The top 3 holdings, Apple, Bank of America, and AXP, and then the fourth is Coke. 5th is Chevron. 6th is Oxy. That's what you're buying. So when you're looking at these, again, if your strategy is just Warren Buffett, don't buy these names. Just go and buy Berkshire. If you're going to follow Buffett, just buy Berkshire. That's it. So Apple. Let's talk about Apple because Apple had a crazy day on Friday. In the last final 15 minutes, it dumped 2%. Okay? That is a crazy, crazy drop on the largest stock on the stock market. We can go and look at Apple in the 4-hour algorithm. It has you in, I believe, at like 220 something. Let's see. It has you in at 229. I said it before. Right now it's trading at 227. I didn't think that was a productive buy for the algorithm. The algorithm makes you 29%. Buying and holding makes you 49%. But we can see this was the first weekend that the iPhone 16 was on sale. Friday, it went on sale. It ran up on Friday, pulled back. People wanted to get out before any weekend news came out. I think that's it. It was a quadruple witching on Friday. So there was some options plays as well. It was just interesting. But Dan Ives, first weekend of iPhone 16 sales, seen as bullish. Ives maintains his outperform rating and a $300 price target on Apple. $300 would be significantly up. Now, he's not talking about the next 3 months. He's talking about $300 out in the future, within a year or two. So it's not something that he's saying, oh my God, it's going to get to $300. But the first weekend sales, super bullish. Okay? Bloomberg reporter Mark Gurman also stated that iPhone 16 may well be a hit product based on early buzz on launch day. Apple, here's another news story. Apple stores draw crowds as iPhone 16 report arrives. I like Apple. Apple is my main one. So I'm still thinking $230 is resistance. It might turn into support. It's just not worth buying here at $228 until that $230 turns into support because your upside is not there. This could easily, when earnings come around, if we don't get good guidance, could easily pull back to $200. I'd rather see you buy at $231, $232 than $228 and see it pull back to $200. $231, $232 when $230 becomes support. It just hasn't yet. So I like that one. Now we talked about the creator of Bollinger Bands. I love Bollinger Bands. Google Bollinger Bands if you don't use them. I actually love them. When the creator, John Bollinger, he's on Twitter at BBBY Bands. His handle is B Bands. Nice little W pattern on the weekly Bitcoin chart. I drew a regression channel to highlight the flag that is forming. Bullish setup awaiting confirmation. When he says there's a bullish setup on Bitcoin, you go and buy Bitcoin. How do you buy it? Well, I don't have a Coinbase account. Go and buy Coinbase. Go and buy iBit. Go and buy MicroStrategy. They're up today. Let's see what iBit is at. Let's see. Okay, I'll edit that together. I think I have to log out of Trendspider. I don't think I logged out and logged back in. Gotta hope stuff doesn't crash and then I have to reset everything up. iBit. Sometimes the 4-hour algorithm gets a little hung up. Okay. Here's iBit. It's up 0.56. Okay. Algorithm got you in at 32. You make 8%. It's only over 8 months. If you bought and held, you make 28%. I'd say anytime that Bitcoin's under 60,000, it's a buy. I agree with Chris. Chris, I think, put this strategy out there months ago. And we've seen it trade sideways. I think my average purchase price on IBIT right now is like 36. I'll buy more as it gets under there. I like John Bollinger. I love the Bollinger Bands. You can also, I think MicroStrategy is also a leveraged Bitcoin play. Michael Saylor saying it's going to 300 million. I forget what price he put out there. It's at 147. MicroStrategy up 1%. It's leveraged because this dude just takes out loans and buys Bitcoin. Now, the value of the Bitcoin that he holds is not worth the actual stock price. Just understand you're paying a premium for MicroStrategy. But I like the way the algorithm performs. The algorithm, the 4-hour algorithm, makes you 918% over 24 months. That's life-changing money. Okay? That's life-changing. You can turn $1,000 into $10,000 over 24 months with this strategy. If it backtesting. Backtesting is the most important thing. But when John Bollinger says he's bullish, I like to take a look at it and see where I can make some money too. But again, you go back to sizing. The way to size into this is not to take $1,000. If your account's $2,000, you should not take $1,000 and put it into a Bitcoin. You should be taking 4 and 5% and putting it into Bitcoin. Let it grow to be 50% of your portfolio. Let the others, take the others. You only need to win 40, 50. You don't even need to win 50% of the time. I was on Spaces last week with Austin Hankwitz, who is the person who's actually doing this. And I watched this Grit Capital, and they go over where's the best place to put money after the Fed starts lowering rates. What was interesting, super interesting, is they said CSHI. And so let me show you how I use the tools, because I went over here and I don't know CSHI. Okay. It's a neo-enhanced income alternative fund. And when you take a look at this, you say, okay, well, why does it go up like that and stuff like that? It's because they pay out a monthly dividend. Okay. And the dividend, the yearly dividend rate is 5.9%. Okay. That's an annual dividend rate. So the last dividend that they paid was on payout date 8/22. So you've got one coming up. It looks like they probably just paid one out today or something, but it's 5.9%. Now, the quant doesn't like this. Quant hates this stuff. The momentum is bad. If you take a look at CSHI on the charting and you look at it, we'll select metrics and we'll go performance and we'll do total return because that includes the dividend. Okay. Look at the S&P versus CSHI. CSHI is going to give you 5.7%. That's what it is. The forward is 5.4. As rates come down, this one probably comes down as well. But it's still higher than most places. And if you put your money in there, it's been historically, you can go back here to 3 years. Now, historically, 12%. So, again, 12% against the S&P 30%. They're saying that this was the safest. Now, what I wanted to know was, well, what are some of the peers on this one? I didn't look at peers. I looked at summary. And then I said, ranked in class. Let me look. It's 52 out of 52. Well, what's the number one? And it's this ultra short duration ETF, GSY. And I said, let me look at this one because this one looks like it's just as interesting. Now, this one is going up in this territory. Okay. We go and we look at the dividends here and the forward dividend, 5.65%. Okay. It's not as bad as CSHI. Let's go to the charting and let's select symbols and we'll do the S&P and we'll do CSHI. Okay. We'll look at both of these because GSY is an Invesco ultra short. So it's triple levered ETF. So it's not one you want to hold on to. But when we select the metrics and we go to performance and we do total return, because that includes the dividend, we can update this, okay? GSY over 1 year makes you 6.98%. CSHI makes you 5.73. When you go to year to date, GSY makes you 4.6. 6 months, GSY makes you 3.4. CSHI makes you 2.79. What I'm trying to tell you is this Invesco Ultra Short Duration ETF, if you just want income and you want to make some money while these rates are, it's too volatile for you, we all know that bond rates are going down, that the rates are being taken down. Okay? This is an ultra leveraged ETF against that pays out on a monthly basis. Might be something you want to do a little research into. I think it's interesting. Again, when Austin said, hey, I found this one, I just went to Seeking Alpha and I said, you know what? Let me look at the number 1 out of 52 because number 52 out of 52 is what Austin and Grit Capital said. You can find others and they're all in here. What is it? It's ultra short bond ETFs and you can find these. I like this one, GSY. Now, does the quant like it? No, it's number 1. It's 1.18. The reason is the momentum sucks. The momentum sucks. And the momentum sucks is because they pay out a dividend on a monthly basis. So if you're sitting there in your rocking chair and you need some income, this may be for you. But I was on Spaces last week with Austin, and I thought that was interesting, so I brought that one up. Now, let's see. Squidward from YouTube, another excellent episode. Can I hear your thoughts on FedEx today? Is it a buy or stay away? He loves Penny. Penny says, thank you so much. FedEx. I am not a transport guy, and I'm not a huge fan of FedEx. So for me, Squidward, I would particularly say it would be a trade. Doesn't mean that I'd stay away from the stock because I do think, again, this is Warren Buffett's third biggest holding or fourth biggest holding. I think it was up there in his holdings. I like the company. The problem is that the company can't get out of its own way. And we talk about good management and stuff like that. It had a run up here. And clearly you can see, if we just pull this, I got to pull this a little bit more. Done. Okay, there we go. And you can see there was a gap here. Okay, the gap on earnings here, December, was down. And then we traded in that range and we got all the way up here. You had a nice run up into the March earnings. And then you went way down into the June earnings and they gave good guidance. And what happened? It gapped up. And then what happened now? It gapped down. And so you've got all of these gaps in there. Now, FedEx, from a fundamental standpoint, I just don't like it. And the reason I don't like it is, how easy would it be for Amazon to actually launch something like this? They already do home deliveries. How easy would it be for Amazon to take their lockers and say, you know what, as a Prime member, just drop a package off at the locker. We'll pick it up and we'll deliver it to this person. How easy would that be with AI? How easy is that kind? They're already delivering stuff on their own. You know, they can't fill their own deliveries, so they outsource it to UPS. They outsource it to FedEx. They outsource it to the USPS. But they're already doing the majority of their deliveries. So how easy is that to do? I don't know. I mean, here in the U.S., maybe it's not international, but it would definitely cut the U.S. business. Now, when you look at the valuation, it's a B. I don't, air freight and logistics in the quant, it's ranked number 3. ZTO and CH Robinson are above it. I wouldn't get into UPS. I just don't like the shipping business. And so do I think that this stock chart can be traded? Absolutely. The algorithm makes you 42% versus 26% over 24 months. I would trade it. Your MACD significantly down. Your RSI significantly oversold. It's at 28. Does that mean it's going to go up? No. They posted a shitty earnings. So I just don't like it. From Spotfiy, Davey P. The Tyreek joke made me spill on my coffee. Yeah, Tyreek joke. It was good on Friday. Another great episode. I loved it. Penny looks great. Curious about your thoughts on FedEx this morning. Same thing. Davey P. Same thing. I mean, I would absolutely trade this one. I don't want to steer you away from it because I do think it's a good company. I just, when you take a look at a weekly on this one and you look, is that one you want to hold on to for a long time that's trading, post-pandemic? It's going all the way down to 150, all the way up to 320. That's pretty highly volatile. When you take a look at a monthly chart on this one, it does look like it's still in an upward trend. But when you take a look at the valuation and the fact that, it can be a disrupted business, I just don't like it. I mean, what makes FedEx that much better than UPS? What makes FedEx that much different than Amazon? FedEx, they charge a premium and they do a very good job. I just don't like it. That's my thing. Okay. Scans. This is where I tell you kind of what's bullish on the 4-hour algorithm. First one, Eli Lilly. You can see a buy here at 930. I reiterate, anything under 900 is a good buy for this one. If you can get this under 900, it's a good buy. The MACD has reset. It's back to the oscillator. From a RSI standpoint, it's at 46 in no man's land. The problem with this is it is priced for perfection, and the valuation is high. Okay, doesn't mean that it's not justified, because when you add in the growth of Ozempic and their Alzheimer's drugs, again, the PEG ratio going forward is 1.33. But their PE, you're paying 56 times forward earnings. 56 times forward earnings. Whereas if you go and you look at some of these other ones that are a little bit higher on healthcare, maybe it's a little lower. But I would argue anything under 900, we talk about it all the time. It's a GLP and AI market. You stub your toe, you're getting a GLP-1 drug because you're overweight. You get a hangnail. Oh, that's because you're overweight. Your nails are hanging over. You need a GLP-1 drug. Leveraged ETF, DRUP. This is Granite Shares Disruptors ETF. This is in the watch list in Trendspider. Scan for it. It has a buy here at 53.22. You make 26%. If you bought and held this one, you made 30%. Go and do your research and let me know if you have questions about what the holdings are. But do your research in this one. Now, spider sector, they got to cross up XLU. This is the leading spider sector for the year. If you go over here and you look at market data, okay, XLU, and we just do year to date. XLU is the top at 26%. This is effing utilities. As rates come down, you're going to see this one continue up. You had a buy here at 68. Boy, it's at 80. A few months later, July 1st. This is one that didn't participate in that huge pullback. It did pull back. You had an opportunity, not in the 4-hour algorithm, but the algorithm kept you in. Is it extended? Yes. You go and take a look at a weekly. You're up at the top level. You go and take a look at a monthly, and this one is still in the middle of that channel. So I would say you probably still have some run up to go. This isn't, the MACD still isn't high on the monthly. It's overbought, but XLU. Another one that got to cross up, Ross Stores, ROST. Say you're out there looking for a suit, Ross Stores, great place to go. It's a mess to go in there and try and find something. God, it's a crappy store. I'd rather have TJ Maxx. Honest to God, I shop at TJ Maxx. I shop at Home Goods. That's it. And the final one that got to cross up is Fordnet. Fordnet, I sold at 70. It's at 76. Got it trading at 77. Algorithm gets you in at 76.79 today. The MACD has reset. This most likely is going for a multi-year breakout. Look at this weekly chart, okay? It's breaking out of the top. If it holds that 81, okay, say it gets to 96, and then it pulls back, and it pulls back to 81, that's the support tested. And that means this resistance of the old high turns into new support. Fordnet. Keep an eye on it. Add it to a watch list. Make sure you're scanning on this one. It's not crazy. This is cybersecurity. They posted really good earnings. The valuation's a little bit crazy, but every cybersecurity company has crazy one. The PEG, trailing 12 months, 1.7. Forward, 2.6. So it's a little bit expensive. Palo Alto Networks is my choice. Palo Alto Networks, I have this one. Now, when you go to Palo Alto Networks, there are 54 analysts covering it. Their average price target, $379. Yes, they chased it up. This is your opportunity to get in at $341. Again, I think there's opportunities out there. So I think this was a good episode to show you exactly how, what are we doing now? You're in this seasonal time period. Make sure you're doing things right. And if you don't, go out and learn. And I just gave you a foundation on how to build a portfolio. I gave you tools. Trendspider, Seeking Alpha Premium, and Alpha Picks. Those are the tools that I use personally. And I sleep at night fine. So we all have different risk tolerances, different portfolios. If you don't have the money to spend on the tools, there are plenty of free tools out there. So if you have any questions, hit me up. The link tree, my email address is up here on the right. or you can find me on any of the socials. Again, sign up for the newsletter. It's free during the week, so there's no reason not to. dailystockpick.substack.com, or go to the link tree and look how you can support the podcast. I appreciate you all. Have a great Monday. Enjoy it. I'll see you tomorrow. Bye. Okay, let's see. Larry, what's the return if bought every alpha pick? If you bought every alpha pick, it's 114%. Patty, they manage the portfolio. So if you're in alpha picks, I can't show it on air. They yell at me when I show it. But if you go to alpha picks, I think you might be a member, but if you go to alpha picks, there is a returns page. And you can look at the returns. They're super open about it. Again, I'm not a huge fan of, hey, here's a stock to buy and here's when to sell. But the fact that they have that performance window is what I attribute to. It doesn't predict future performance. They even say past performance is no guarantee of future results. But the quant has proven itself over a time period. And that's what they base it on. And it's the creator of the quant who picks these stocks. So that's a guy that I want to follow. Hey, Marco. I am going to go now, actually, because I do have to edit together. And I want to go hiking. I really want to go hiking. Because it's super nice out. So, anybody have any questions? I thought I did a pretty good show. And Patty, that performance is if you buy every alpha pick. That's why it's so good. And I hope, I mean, remember, if you can't afford or you have any questions about paying for these things, don't buy it. I went years without any of these tools. And I managed to make, a significant amount of money, not with any crazy salary or anything of that sort. And yes, I did stock picking. That was pretty good. Hey, Brandon. But again, I don't think that the tools don't make the portfolio. It's how you use the tools. So if you're just going to buy Trendspider and expect it to perform for you, that's not a tool. If you're going to buy Seeking Alpha and expect it to perform you, that's not a tool. If you're going to buy alpha picks and expect it to perform for you, that's the tool you want. Otherwise, use FinViz. FinViz has tons and tons of information on it. Tons. And there's great ideas on FinViz. You can use the scanner on FinViz. It's a screener. I have several. I have this below 52 day week. The 52-day SMA, or I'm sorry, the 200-day price 30% or more below. I have this filter. I can go to the Dow Jones. Let's see if any of the Dow Jones CRM. What's their PE? PE is 46. Average price target 307. It's trading at 267. Most recently reiterated, they brought it up to 305. BMO Research. So I used this for years without Seeking Alpha. Yeah, and time is the other thing that you have to put in. And if you don't want time, again, get alpha picks. Let's see. I'm probably down because I think Apple's down. Let's see. Let's see how my portfolio's doing before I sign off. Yeah, Brandon's one of the OGs. Yeah, I'm down 0.05%. That's not much. I got to do a better. I don't, here, And Travis, if you're here, I see your email. I don't do a good job of promoting Spaces because I figure Spaces promotes the podcast. I go on Spaces to get I listen to the ones that I'm on. I usually prepare a little bit, not much, but I view it as having a larger audience outside of this podcast. And that's kind of where it brings some people in. So that's why I don't promote it, because I think this podcast is a better tool than Spaces. Spaces, man, there are just people talking on there who love talking their own book and who love to hear themselves talk and say absolutely nothing. And if I'm just going to repeat what the dude said before me in a different way, why do I want to listen to that? Trash. Don't get me started. Wolf had some really good Spaces last week, though. He had some really, really good ones. I was involved with, I think, 2 or 3 of them. But I'll reply back to Travis. Oh, okay. And fuck the Cowboys, by the way. Kudos to the Ravens. I have this because I worked at Dallas Stadium. I got a free shirt. Your boy wears free shirts. Okay. I'm out of here. You guys have a great day. I'm probably going hiking. See you. Bye. WVF. If your lack of knowledge is prohibiting you from buying tools, okay? Here's my guidance for you, because I used free tools forever, but I wanted to learn. I don't think it's the your lack of knowledge that's stopping you from getting the paying for the tools. It's your lack of wanting to learn. Yeah. WVF, that statement right there. I feel like my lack of knowledge will cap the effectiveness of the tools. No. It's your lack of wanting to learn that's going to cap your effectiveness, whether it's free tools or paid tools. Because I always say it this way. I think my free newsletter gives people a very good insight into the market. And yes, there's an ability there to take a look at it and blah, blah, blah. But I think the paid newsletter subscribers, because they paid for it, they want to learn. And they're there kind of pushing things. And there are like 7, maybe 10 of them who are voracious, who email me almost on a daily basis, to the point where I might have to put a cap on some stuff. But I'm usually really good about getting back to people because, the reason the price continues to go up, and I probably will raise it at some point in time again, is because as I get up there, I want the people who are more voracious to pay more, because my time, I put a lot of time into the free one because I don't want to charge people to learn. But if you're going to have access to me, my time is limited. And I got to tell you, man, there are days where I regret starting this damn thing because I've got like 15, 20 people to get back to at the end of the day. And I never wanted that. And they're all paying me. So, it's not like I feel like I can't get back to them. I want to get back to them in a timely manner. There was a guy, I was out shopping with my girlfriend at an outlet mall on Friday. And he's like, hey, how do I set up an alert in Trendspider? And I said, hey, ask Trendspider. And he said, I did, but they said they need like more information on your algorithm in order to set up the alert. And I said, listen, I'm out shopping right now. And this was email. I said, I'm out shopping right now, but when I get home, I'll send it to you. And it's a very simple setting in Trendspider. And it's super, super easy. If somebody for free were to ask me how to set up an alert on Thinkorswim, I wouldn't know. And I'd Google it and I'd send it back to them. And then if they continue to ask questions, I would continue to ask. But that person might get put behind the paid newsletter subscribers because they support me. So I think paying for something just puts your skin in the game and makes you a little bit more attentive. So VWF, I think your portfolio size needs to be appropriate for the amount of money that you spend. If you have $1,000 portfolio, no freaking way I'm going and paying $642 for Trendspider for the year. If you have a $10,000 portfolio, I'd even question if $642 is worth it. If you have a $25,000 portfolio, I might think about it. But think about it. That's a lot of money to make up and then plus make profits on that. You got to be trading a lot of times. Get a free tool, understand it, and I think you'll do fine. But yeah, Brandon, I know, has Trendspider, and it's fun. I mean, I'm sitting there at football games yesterday, and I'm like, okay, let me just do a scan of charts. I went up here into the upper right, and I said, let me just look at scanners. Bearish engulfing candles on these are all bearish. And I said, let's look at some bullish. So I just typed in bull here. And I said, daily bullish hammer candle by Trendspider on the S&P 500. You got Delta Airlines. That's a bullish candle. Is it worth it? No. Might be for a little bit longer. Ulta has a bullish candle. That one might be getting on the 4-hour, it might be getting a golden cross here. That might be worthwhile. Microsoft might be getting a golden cross. You can look at this stuff. And then let's type in bull again. Let's look at some other ones. Because today, bullish blue raindrops on the S&P. Raindrop candles are great. And bullish, look at all that green. Whew. This is VTR, which is Ventus, which has a bullish candle. It's up 1% today. eBay is up 1% today. You can go down and Uber is up 1% today. JCI, which I don't know, Johnson Controls, up 1%. There is so much to Trendspider that you can do, that if you're actually just like geek out on stocks, so much you can do. Dangerous opportunity. Is that a scan? Let's see. No, I guess danger's not in there. Wolf has a Money Crew by Wolf. They've got 10 stocks that they put in here weekly. PDD is up 2%. This is TG Therapeutics is down 2%. NXC, this is Next Gen Energy, is up 5%. Carvana is down 1%. I don't know that they update this one, but yeah, there's just so much. Okay, it's 10 o'clock. I'm out. You guys have a great day. So
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.